So today we want to talk about the self-employed income, and I have right there on the screen. This is what we're going to be talking about: sole proprietorship. If you are an LLC, and I'm not going to cover LLCs today, but if you are self-employed, and I'll give you some ideas. If you are an Uber driver, if you are a food delivery, if you're in that business, if you own your own, if you have a business and you own your own shop, and if you're not incorporated, right? So basically, you are working as a DBA. You're doing business as a company, but you are not incorporated. You are not an LLC. You are not an incorporated business. Then you have not separated your entity from your personal, your business from your personal. Then this episode is for you. I'm talking about self-employed individuals here, and you should pay a lot of attention because I'm going to cover things like tax preparation, tax obligations, and we're going to do that fairly easy. Very easy. We are actually going to go into IOOGO tax, and we're going to see how the income tax return is filed for you, and we're going to do that very, very quickly. So why don't we get started? Let's talk about the very first topic, and that is who is self-employed. And I think I just covered a little bit, but if you are not employed by someone else, if you are not an employee, if you're not a W-2 employee, when you work, if you don't work by the hour, if you don't have a schedule, if you don't have a job description per se, or if you are, people who are in the gig industry now, like Uber drivers, food delivery, and if you're a massage therapist, real estate, you work for yourself. So the IRS will consider you self-employed, and self-employed, it's cool, right? Self-employment is cool, and I'll give you the example with IOOGO, right? I'm not self-employed. I actually work for IOOGO, and I am the CEO of IOOGO, but I work for the company, so I'm not considered self-employed, and that's mainly for tax purposes, right? There's a point where you don't want your company, or you don't want to be working as a self-employed individual because the taxes get really expensive. So, but let's say that you have, let me combine the screen here. Let's say that you have decided to go on your own, and you have decided that it is a good idea to go ahead and start doing your business, and you go to the county and you register your business as a DBA. So you are John Smith doing business as the phone company, and that doesn't make you a registered LLC or a separate entity. What that means is that you are the entity, and the entity is you. Whatever happens to the business happens to you. Whatever happens to you happens to the business. So you have to keep that in mind. So that's what self-employment is for companies who are looking to grow and take your company to the next level. You cannot stay in the self-employment bubble for a very long time, right? Self-employment is cool, but it gets very expensive too. There are certain deductions that you can take. That's a real thing. But at the same time, there are also restrictions with some of those deductions. So make sure that you are getting the right tax and legal help to structure your company, to structure your business. But if you are a realtor, for the most part, realtors are self-employed. They work as contractors for the realty company, but you're not an employee of the realty company. Uber drivers are self-employed. Food delivery, self-employed, and if you earn cash, if you have your own business, right, and you earn cash or check or credit cards, and you collect all the payments, and more likely you're self-employed. So the simplest way to know if you are self-employed is that you will receive a Form 1099 at the end of the year. So Form 1099 miscellaneous, it's going to have on box 7 non-employment compensation. And what that means is that whatever work you did for that entity that gave you that form, consider you a non-employee, so self-employed. And now you have to open a Schedule C on your tax return, and now you have to pay self-employment taxes. So I think that's the next topic that we're going to cover. Right now that we understand who's the self-employed, let's also understand what are those tax obligations that you have. So you are self-employed. Now let's talk about the tax obligations, because being self-employed is in my point of view is one of the coolest things there is, right? No one really dictates your time. You can have your own schedule, but guess what? You are the boss and you are the employee, and because of that, the government will charge you taxes as both, right? So you are the employee, so you have to pay Social Security and Medicare. And since you are the employer, you also have to pay Social Security for that employee. So I'll give you the example of John Smith. John Smith works as self-employed at the phone company. His company, he is the company is he. So John Smith has to pay self-employment tax. What does that mean? What is self-employment tax? Well, self-employment tax is 15.3% of anything that he earned as a self-employed individual. On top of his personal federal tax, he has to pay 15.3% in taxes. And what does that cover? What does 15.3% cover? It's going to cover the employee and the employer portion of Social Security and Medicare. So keep that in mind. So when you first start and you have $10,000, $20,000, $30,000, $50,000 in revenue, you're probably taking money out to pay yourself and putting money back into the business, and that's typically the cycle of a new business, right? There's really no set salary, but you understand that that self-employment tax is going to be part of your life as long as you are not working for your company. And if you continue to work as a self-employment taxes will be part of your life. And what you need to understand is that the more money you keep bringing in, the more the self-employment tax line gets bigger and bigger and bigger. So imagine just in simple math. Imagine that as a self-employed realtor, you earned $100,000 in commissions in 1 year. Well, your self-employment tax is $15,300, right? And on top of that, you have to pay federal taxes as well. So you end up paying a ton of taxes, right? So this is where it makes sense for some companies to, or some self-employed people to incorporate and become an LLC and become employees of your own company, because there are some nice tax breaks that you can enjoy. Now, that's not for everybody, so don't go out there and try to incorporate just yet. Get your business to begin to do bring some revenue. And then once you have some revenue, once you understand how the business is growing, then you should incorporate and start enjoying these tax benefits. The reason why I say that is because there's a lot of tax responsibilities and requirements that you're going to have, a lot of documentation that you're going to be required by the federal government, by the state government. So sometimes it doesn't make sense for you to go out there and incorporate if you're just making $25,000, $30,000, $50,000, right? So a lot of work to do in terms of paperwork. So remember, let's recap this process. Number one, you have self-employment tax, which you have to pay at the end of the year. It's calculated in your tax return. So this is why sometimes the self-employment individuals, either they're doing their tax returns themselves online, or they go to a tax pro and bam, the bill is this big, right? The tax bill gets really big, and the reason is because you are paying self-employment tax, and that is more expensive. It's a lot higher than your normal job tax. So if you're just an employee. So all right. So let's talk about the other tax that you have to pay, and that is the estimated tax payments that you have to make every quarter. Now, I want to be careful here because if you're just Uber driving and there's really no way for you to calculate that. I mean, you can go to last year's and calculate your income from that. This is your first time Uber driving, and maybe you're going to make 20 grand, 30 grand, right? It's probably not ideal for you to be doing estimated tax payments, but you have to consult with either with one of us here at IOOGO or your preferred tax professional, and see what the best situation is for you. But make sure that you are paying attention to these two taxes. Quarterly taxes, every quarter, every time the quarter ends, January, February, March, that's when the quarter ends. So in April, I have to be paying self-employment tax. In April, I have to be paying quarterly tax for quarter one. And so it goes like that subsequently all the way to the end of the year, right? So if you overpay your estimated taxes, then you get a refund. If you underpay, then you have to pay the IRS. And if you don't pay, sometimes you have to pay a penalty for not paying self-employed, for not paying the estimated taxes. But again, every situation is different. Sometimes the penalty is so meaningless that you really didn't have to do those contributions throughout the year. Maybe you're doing Uber driving on and off, right? So maybe you need to assess that situation with a professional to see what your situation is, right? So other than that, taxes are simple. Look, my shirt, taxes are simple. You make money, you pay taxes. You're self-employed, you may have some deductions. I'm going to say that one more time. You make money, you pay taxes. You're self-employed, you may have some deductions. And what I mean may have some deductions is because just because you received a 1099, it doesn't mean that you can go ahead and claim deductions, right? And this is where I come in and I start talking about the tax return, right? And as I promised you, we are quickly moving on. And this is the last topic before I show you how you do that tax return on IOOGO tax. So if you are self-employed, more likely you have deductions. If you just receive the 1099, it doesn't necessarily mean that you can go and claim all of these deductions. The biggest misconception, right, is that I can claim everything I want because I'm self-employed. It doesn't work that way, right? We, the tax professionals, follow the tax forms and the tax laws. You can do the same thing, right? We created IOOGO tax so that you can do the same steps that we do. It's really not that hard. It's not complicated. If you're in real estate, you should be able to file your own taxes. If you are in HR, you should be able to file your own taxes. If you're a teacher, if you are self-employed, if you are able to figure out how to apply for Uber driving, you should be able to file your own taxes. It's the same process. I enter my personal information, I enter my income information, and the software does all the work, and you're done. All of us, whether it's IOOGO tax, Tax Act, TurboTax, H&O Block tax, your CPA tax, my tax, we follow the same law. So there's no way we can give you different amounts, right? I can't give you more than your CPA. It doesn't work that way, right? Now, there are some of us tax professionals who are more educated than others. But if you just have a simple 1099 income minus expenses, then there's really no need for you to go and pay someone to do your taxes, right? 72 million people file their own taxes. You could be one of them. So it's really not that hard. All right. So let's talk about your annual tax return. So whenever you are self-employed, you are required to file a form called Schedule C as part of your tax return. So Schedule C, part of your tax return. And what Schedule C does is simply takes the income and the expenses and it gives you a net total. So I had $50,000 in income, $25,000 in expenses, and then I get a total a net total, which is $25,000 in this case, right? That's it. That's all. That's all it is, right? And you're over here scratching your head, thinking, well, how am I going to report this? What can I report? It's really not that hard. It's really not that hard for you to understand what you should report. And I'm gonna simplify this for you. You should only report things that are related to the business, right? If you got to think about it this way. If I'm ever sitting in front of an IRS agent, can I explain this expense? Can I really make sense that this expense is related to the business? So it's related to the business, it's required by the business, and you can prove it. Number one, it's related to the business. Number two, it's required by the business. Number three, you can prove it. You have paper to prove that this is an expense. So if I go buy clothes for me, right? How is that a business expense? If I go buy clothes for me that I'm not going to use for the business, it's just for me. But I can probably think, oh, I'm going to justify it by saying that, you know what, I got to look presentable for the business, so, you know, I should just claim it. Doesn't work that way, because then when I'm sitting in front of an IRS agent during an audit, the IRS is going to really push me to convince them that this claim that I'm doing, that I'm making, is really a legal claim, right? And when they find out that it isn't, that, you know what, I wear this $3,000 suit that I bought, that I wear for other things and not necessarily for work, right? I'm in construction, or I'm an Uber driver. I don't need to have a $3,000 suit to be an Uber driver. Whenever the IRS can find out logic, then you're done. You have to pay money back, and you have to pay penalties. So number one is related to the business. Number two is required by the business. Number three, you have proof. And that's it. That's reporting any expense. That's it. That's all you have to think about, right? So let's talk about how do we enter this information in the system, because and I'm gonna bring you here to IOOGO Tax. Hopefully it works this time, because sometimes when I'm trying to show you, my Mac doesn't want to work, but it looks like it's working very well right now. So why don't we do that? Why don't we go to IOOGO Tax, and let's see if I can put that on the screen for you. There we go. Boom. There we go. So what I'm going to do is I'm going to log into IOOGO Tax, and I'm going to show you how easy it is. Look at all this security right here. Hopefully it doesn't get in the way. Boom. So I'm going to log into IOOGO Tax, and I'm here in the system right now, and I'm going to show you how simple it is to enter all of your self-employed information. So I'm going to go straight up income. Okay. And what I'm going to do is, and I'm going to put the screen only so you can see it. So what I'm going to do is I'm going to add income, and then I'm going to come down here to self-employment income. See that? Self-employment income. And I'm going to click next. And now I have self-employment income business right here on the very top. So I'm going to click on add new business. And I'm going to call my business. Look, it's asking me for a principal, business, and profession. I'm going to say is food service, and then I'm going to say it's a limited service restaurant or snack and non-alcoholic, and I'm going to call it food for all, or actually this is the street address. So this is in 213 Dallas Drive, 75204. So I enter the zip code. I'm going to keep going. And it's going to ask me some simple questions right now. What's my accounting method? It's typically cash. Did someone else operate this business for me? No. Did I start this business in 2019? Yes or no? I'm going to say no. I started a long time ago. Did I pay contractors? I'm going to say no. I didn't pay contractors this year. Did I have a personal high deductible health plan? No. And I'm going to click next. All right, that was pretty simple enough, right? And I don't have I don't have a 1099 miscellaneous yet. I do have cash, so let's do that. Let's add the cash. Let's say that this business earned $30,000 in cash, and there you go. I've entered the cash income that I have earned throughout the year. Now, if I need to enter a 1099 miscellaneous, I'll simply do that. It gives you the option and the instructions there. Very simple process to use. Now, I want to stop here and I want to give you I want to put some thoughts in your mind before we finish. Number one, yes, you can report anything that you can prove. And anything you can start to make, and you can say, oh, I bought this remote control and I use it for the business and blah, 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 blah. And I can try to make logic of it. I can convince myself of it. But some of you are trying to get business loans. Some of you are trying to get financing for your business. And remember that it's not how much you made, it's how much you had left over at the end. So again, the bank is not going to care if you made $1 million. The bank is only going to care that you spend $999,000 and you only have $1 left. And because of that, you're not going to qualify for things. So yes, you will reduce your taxes if you claim all this stuff, and you might even get in trouble with the IRS for claiming things that you are not supposed to. But the worst part is when you're trying to grow your business, no one's going to give you credit because you are basically saying everything that comes in, I spend, and I have no way to pay you back. That's what you're saying. So I'm going to say $30,000 right here. You can, and I'm going to click next. It's asking me if my business has inventory. I'm going to say no. And then it's going to bring me to the general expenses. All right, here, look at all these lines of expenses. And typically what happens is that the business owner is saying, well, what do I enter here? What do I enter there? What do I enter here? Well, it doesn't work that way, right? You should pay attention, right, to this, right? It doesn't work that way. Work from your documents to the system. If you have marketing expenses, you enter it in the marketing category, right? Stop looking for things you don't have. But if you do, you can go line by line, right? Maybe you forgot that you had advertising, right? And now you have advertising. So the one thing that I want to clarify, right, is that here are 28 these are the 28 most frequently used categories that the IRS sees, right? And this is basically the form. So if you have something different that you don't see here, you'll have a chance to add it, and I'll show you how. But let's say that I have $7,000 in advertising, that I have in supplies another $7,000, and I can prove all of this, right? I'm a restaurant, so I don't pay commissions, I don't pay contract labor. My business insurance is $1,200. Let's see what else I have. Travel, wages, licenses was $400. Repairs for the business was $500. Legal and professional fees was $1,000. And I don't have employees, it's just me. So I keep going, I can't find anything else. Look, I don't have deductible meals and entertainment because I work in a restaurant. I may have truck and car and truck expenses, and I may have other expenses, and I'll show you what that is, right? So let's go ahead and talk about so I'm going to click next here. All right, I already clicked next, and here I am in the car and truck expenses. And why am I claiming car and truck expenses for this restaurant, right? Oh, maybe I am an on the road, one of those on the road truck expenses. So or trucks. So I'm not going to. I'm going to add some of the miles, right? Maybe I go to, maybe I'm a taco truck or something like that, right? So I'll give you the example here, and I'm going to say, Ford Explorer. And the vehicle, I put the vehicle in service to the business at the beginning of 2019, and I drove 2,500 miles for business. And you can see that the system is already calculating your deduction here, right? I'm not going to worry about number of miles driven for commuting. I'm not going to worry about any of that. I don't have any parking and toll. And I paid $165 for the state and property taxes for this vehicle. So there we go. Very simple stuff. Answer yes or no to the following questions. Was the vehicle used for personal duty or for personal things during off duty? I'm going to say no. This vehicle is just for the business. So me and my spouse have another vehicle for personal use. I'm going to say yes. Does the vehicle weigh more than 600 pounds? Yes. Do I have evidence? Yes. Is the evidence written? Yes. Right? Only you can answer these questions. No one else can answer these questions for you. So I'm going to click next. But before I do that, check it out. There is my car and truck expense deduction. Very, very cool. All right. So now we come to that situation where, you know what? I did not find the place where I could put this, enter the expense for that one stove I bought or that one part or whatever, right? Or I couldn't find gasoline, right? So I'm gonna write it here, right? Gasoline, and I spend $800 in gasoline, right? I couldn't find a place where tires for the car. I'm gonna write it here. $200 for tires for the truck, right? We're talking about business, right? And you can write it here, and this is where people get creative, right? They'll start writing things that are personal because you can type them. Look, that's between you and the IRS, right? Even if you go to a tax preparer and they enter that information in the system like that, that is between the IRS and you. Not, the tax preparer is going to get in trouble for not guiding you correctly, for not telling you what to do and how to do it correctly. But you're going to get in trouble as well. So, all right, check it out. Check it out. Right there, let's click next, and here we go. We have, in less than 10 minutes, I have added $30,000 in income. You can see it right there, $30,000 in income. I have $17,000 in normal expenses, $1,600 in auto expenses, $1,000 in other expenses. So I have a net profit in my business of $10,285, and that is where I'm going to pay taxes.